Hello, in this presentation, we'll talk about the financial transactions related to setting up vendor balances into our bookkeeping problem in Excel, keeping in mind how that same information might be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We will first take a quick look at QuickBooks and then put this information into Excel. When considering QuickBooks, if we were to start the new business and enter our vendors within the new business, then we could just go into the vendor section, add the vendors, and then go in and put the beginning balances into the vendor section. That's not something we can do with every type of accounting software. Oftentimes we would need to put a journal entry of some time into accounting software. QuickBooks allows us to just automatically input that information into the beginning balance. As we do so, then QuickBooks makes the journal entry, meaning it will make a journal entry to some other account, possibly an account called opening balance equity or undefined expense account. Once we enter those opening balances, if we run the vendor balance summary, in this case we have the $15,000 that was entered into that opening balance, it would then be in the accounts payable account as well as the vendor balance summary. Let's take a look at entering this information into Excel. Here we are back in Excel, and we remember last time we entered our inventory, we entered our receivables. We will now be entering the fact that we owe vendors money. And the account representing us owing people money, particular vendors money, would be the accounts payable account. So that is what we will be working on. When we record a journal entry, part of it will go to accounts receivable, representing the fact that we owe vendors money. Then we're going to, of course, have another half of the journal entry we will have to record. When we put this information into an accounting software just to start out, just listing what we owe to somebody, QuickBooks then made this journal entry and we didn't really see it, and we'll actually record the journal entry here as we do this. Now, what we did see within QuickBooks is when we set something up in QuickBooks, what we would see is we would just list out the beginning balance that we owe to a particular vendor. That would be for us a subsidiary ledger. So we're going to have a new subsidiary ledger where we're just going to list out who we owe, and that will back up the accounts payable account. So we'll list out the subsidiary ledger first. That's what we would typically do in accounting software. I'm going to use the left arrow. We'll just keep on going. The right arrow. We're going to the right. We're just going to keep on going right until we find our new item over here, which will be the orange accounts. It's all the way over here in CZ2. CZ2. We see our information. We're going to enter new vendors into this information. This is what we will call our subsidiary ledger for accounts payable, similar to a subsidiary ledger for accounts receivable over here, in that we're going to list the vendors we have, in this case only one, and how much is owed to those vendors, and put that information here. That will back up the information on the trial balance and the financial statements under accounts payable. So we're going to put here Epiphone. That's the vendor that we owe at this time. Remember that we're typing that into CZ4 here, and then it'll populate in the middle. We're going to put the amount we owe. I'm going to put it in the credit column, and I'm going to represent credits with a negative number, so it will be consistent with that because accounts payable is a credit balance. We're going to put it in there with a credit in cell DA7 negative, and we're going to put 15,000. We're not going to put any commas or anything like that, and we're just going to select enter. It'll put the brackets around and 15,000. We'll also have the total up here. It's just summing up all the vendors that we owe, only one at this time. And that amount then is what should be on the financial statements. When just putting this information into an accounting software, typically we'll just generate some type of journal entry and create that journal entry within accounts payable. We will here record that journal entry. So we're going to go all the way to the left. I'm just holding down the left arrow, going all the way back. You can just keep holding it down until you hit the wall, all the way back to column A. We're going to start a new entry with the date on 1/1. Once again, first day of the year we will be operating in. And we are going to put the amounts here. Accounts payable is what we owe. Now, accounts payable is a liability account. We are increasing the liability account. Therefore, we're going to do the same thing to it as its normal balance, which is a credit. So we're going to credit accounts payable representing the fact that we owe vendor, the one vendor in this case, $15,000. I'm going to copy this cell in AJ13, right click and copy, and put that over here in B12, right clicking and pasting 1, 2, 3. We'll then put the amount in the credit column in D12 with a negative 15,000. That's the amount. We're then going to need to debit something for 15,000 to have the debits equal the credits, and we need to know what will that debit be. We know that 15,000 most likely was a purchase of inventory. So we most likely had inventory that we purchased at some point, but we're not going to debit inventory because we purchased it in the past, and what we're doing is really following what we're doing when we set up these new beginning balances in a software such as QuickBooks, and just going to put that other side to some type of equity account. In this case, we're going to put it to owner's equity. The idea being that although we purchased inventory here, we already put the inventory on the books and put the other side to the equity account. And now we're going to put the accounts payable on the books and put the other side on the equity account, meaning it'll all kind of wash out at the end of the day if we put in the correct beginning balances all in place at this time. And that is, in essence, what is going on when we put beginning balances into the QuickBooks account or some type of accounting software when we start a new business and enter the beginning balances without recording the journal entries. So we're going to go ahead and put the other side just to owner's equity, right click and copy the owner's equity. And we're going to put that in the debit side this time, right click and paste 1, 2, 3. We're also going to indent the second journal entry. You don't have to, but I'm going to do it anyways. I'm going to the Home tab, Alignment Group, and Indent. You can also just click the space bar 3 times or leave it as it is. If there's a formatting problem, then just leave it as it is. If it's locked because of locked cells or because of the protection of the worksheet, then, and remember that we're protecting the worksheet so that you don't delete some of the formulas and mess up the worksheet in the future for you. And so that's going to be the journal entry that we will have. Now, it might look funny that we debit the owner's equity. You could be saying, well, we don't typically do that. And again, it's not because we are this is a normal transaction to do that, but it's because the business is already in process. And this is typically the way we can set up the beginning balances by just making sure that all the beginning balances are correct on the balance sheet and posting the difference to the equity, so it in essence washes all out in the equity section. That's how software like QuickBooks is able to record these journal entries and just give those opening balances and create something that is in balance. So we're going to record this now. We're going to record the owner's equity first. Remember, that's in order, the accounts in order. We've got the assets, the liabilities, and the equity. It's going to be the same order in the general ledger when we look to post these accounts. We're going to go ahead and freeze the panes. So we're going to go back up here to AJ1. Then we're going to go to the View tab, and we're going to go to the Groups, Windows Group, and Freeze Pane. Clicking the Freeze Pane, freezing the panes. And then we'll go over and same order. So I'm just holding down the right arrow. We've got the assets. We've got the liabilities in orange. We've got the equity. We are looking once again for these owner's equity. We were on the debit side this time because we're on the debit side over here. So we're on the debit side over here. We're going to have the new transaction, and it's in cell BG15. I'm going to select equals, point to that 15,000. When we select enter, it's going to bring that credit balance down by 15 to the 8,397. So once again, if you wanted to just type in, the formula could be equal to, and this cell is C11, equal to C11. And you could type in 15,000 as well, but we'd want to use the formulas as much as possible. If we scroll back to the left over here, we're going to scroll back to the left and see what happens. We see that our information is now being populated. There's the 15 right there. There is the 8,397, and those are coming from, and remember, you may not have ability to use these in a protected worksheet, but we still see the formulas that are coming from this cell. And if we scroll back over here, that's where the 15 is coming from, and that's where the 8,397. If you want to experiment with these functions here, you go to the formulas, and in the formula auditing, you can experiment with these cells. I find them useful. So I'm going to scroll back to the left. So that is what's being made. So now we have accounts receivable of $20,005. We got inventory of $2,897. Of those assets, there's $15,000 claimed to those assets in accounts payable. And the difference then is what is the claim to the owner, or the book value of the company, $20,005 minus plus the $2,875 minus the 15, assets minus liability, equals the $8,397, the $8,397. So note the format here. We can get a nice calculation of what we're doing just from the trial balance, just by using Excel. We can say assets here, in other words, assets equal liabilities. Notice the sign is just flipped here, so it's now in the formula term. I'm not putting a negative in liabilities. It's not a credit in the formula. And then equals liabilities and equity, meaning 15 plus equity of 8,397 equals the assets of 23,397. Or we can say that the assets, debits, minus the liabilities, credits, is 8,397 equal to the equity of 8,397. I'm going to turn off the split features. So if we go to the View tab and we go to the Freeze panes, we're going to unfreeze the panes and then go over to the financial statements. So we'll scroll over to the financials. Well, let's do this first. I'm going to undo these and just point to the fact that this should be going now to the financial statements. So that's going to the financials, and this is going to the financials. And that's how the financials are generated. So I'm going to scroll to the right now. I'm just going to the right with the right arrow, all the way to the right till we see the financial statements. And here is the balance sheet where we have the assets totaling the $23,397. The liabilities, there's the 15 there. Total liabilities at 15. There's the 8,397 equity, and therefore the total assets equal the liabilities and equity, and we are in balance. So when looking at software, we typically just jump right to the financials, but remember that those general ledger and the trial balance are being generated as well. Nothing on the income statement. Everything has just been put into the beginning equity account in essence at this time. Therefore, the equity section has that beginning balance and the only activity, none, during the time period. So it's the same as the ending balance at this point.